Hey, everybody. It is Chuck Barone, Friday, April the 12th, 2024. Let's wrap up another week of crazy. Do you see these markets today, guys? Oh, I guess reality is settling into these guys. So we're going to have some fun watching these markets go jostling all over the place. It's just crazy times. But before I get rolling, as always, let me take a half a second. Welcome everybody to the show. And as always, thank you guys for your support. We appreciate you guys, whether you're a long-time viewer. There's so many of you guys. Love every one of you. You're a new viewer. We appreciate you taking some time out of your day to watch the videos, to be here with us live. And we're excited to bring you guys some news you need today. All right, so let's look at these markets, guys. Now, we talked over the last couple of days about the VIX volatility index and how it was spiking up. Over 16 is usually pretty volatile. Today we see VIX spikes again. Now we see more volatility. Thank you, Iran and Israel. So we have a market just tank out today. Stock market looks like crap. The Dow falls 475 points, 37,983. The NASDAQ falls 267 points, 16,175. The S&P falls 75 points, 5,123. Just a horrible day for the markets. Just a horrible, horrible day. Across the board down. And it's surprising. The bank earnings, we knew we were going to get big bank earnings today from all the bigs. JP Morgan, Wells, Bank of America, all of the big five, I guess, were all basically reporting today. And the numbers weren't terrible, but they just weren't super in line with what Wall Street was hoping for. That set the market off. You got threats of war now in the Middle East. That sets the market off. Now the big thing is the conversation was how many rate cuts? 7, 5, 3, 2, 1. Now the big question is, will there be any rate cuts at all? And obviously the stock market has already priced in several rate cuts, so now they're unwinding those trades. The bond market, I guess the beneficiary today of the stock sell-off, yields falling, bonds rising. The 10-year falls 7 basis points, still sitting at 4.5%. The 2-year falls 6 basis points, sitting at 4.90%. So the inversion, 40 basis points. It was getting narrower there. I was hoping that maybe it was going to re-invert and go back to a normal, or at least some semblance of a normal looking yield curve. Not to be, I guess, not right now at least. Bond market beneficiary rates still pretty elevated, though. If you're looking at the 2-year, 4.90. Any bad news next week could get that 2-year yield above 5%. If that happens, guys, bombs away, man. It's going to be bad news for everybody. Federal government bleeding now with these debt payments. The Federal Reserve, I talked about it, losing $114 billion. Everybody's suffering with these higher rates, especially consumers. The market really needs these cuts. So does the economy, truthfully. But it doesn't look like we're going to get them as soon as we were hoping. So the market now readjusting to that. Look at the dollar today. The dollar up 75 basis points on the index, now at 106.01. So the dollar continuing to strengthen. There's another for sure sign. The market now cutting these, or getting rid of these rate cuts. Obviously, rate cuts weaken the dollar. A higher interest rate strengthens the dollar. You can see by the way the dollar is rising what the market's pricing in, at least as far as the currency goes, right? Now, with the dollar being super strong and breaking 106, not a surprise, precious metals had a little bit of a pullback today. Actually was up early. Gold actually touching 2,400 an ounce. What the heck, man? But did fall back. Gold ended up down today, $28.40, closing at $23.44 even. Silver falls 38 cents, $27.91. If those are the prices after a pullback, I'm glad I own gold and silver, guys. These numbers are astounding. I got to say, your host, if you've been watching the show, I've been saying silver, 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 silver. I'm telling you, that run's not over. $30 silver would not surprise me. I think we're probably going to get there sooner rather than later. Gold, I mean, the sky's the limit for all of this stuff. Now, there's going to be some resistance. I'm sure there's going to be some institutional resistance, manufactured resistance, like they always do with precious metals. But the cat's out of the bag, guys. You don't need to spend a whole bunch of money to suppress gold and silver prices to mask true inflation or true weakening of the dollar, because everybody knows what's happening. So we'll see how that works around this time. Oil up small today, up 37 cents, $85.39 for a barrel of West Texas Intermediate. It's way too high, guys. It's going to come down. We just need everything to chill in the Middle East. There's big news today. It was right in the Wall Street Journal. U.S. intelligence, now Israel's convinced Iran will strike with drones, missile attacks somewhere on Israel stuff. Maybe they'll get one of their outside of the country bases or military installations or whatever, consulates. I doubt they're going to attack Israel proper. If they did, that's even a bigger provocation. But everybody waiting to see how this goes now. Now, I got to say, I don't really believe that Iran wants to have a war with Israel. But these Arab Muslim countries, very big on their honor and their pride. Now that they've said it, it's going to be hard to back it up. Back it out, I should say. So it's going to be fascinating to see. Hopefully, it doesn't happen. We don't need more people dying. We don't need more war. We don't need, everything teaming up now, because that really could be the start of something big as far as a war goes. If you get, their Iran's allies, China and Russia, Israel's allies, and the weak asses, us, Europe, the mealy mouth, you got populations rooting for the Palestinians. It's crazy times, guys, just crazy. So oil up. Hopefully that'll, once they put that to sleep over there, which ultimately they will, oil prices come down. Bitcoin today takes a little bit of a hit, down $3,278. Still a good strong price though, $67,294. Bitcoin ETFs. Hey, Kevin, Bitcoin ETFs going to make a difference, are making a difference. I'm telling you guys, this Bitcoin run isn't over. We'll see what happens with the halving. It's going to be really interesting to see how it all plays out. Bitcoin is on the verge of legitimacy, I guess, for lack of a better phrase, right? And if they can maintain these levels without a big crashing sound, it's going to help them immensely, especially with now more people who aren't real familiar with Bitcoin getting into this market. Easy to scare them out. So we'll see how, again, it's going to be fascinating watching all this stuff, how this all plays out. Of course, we're going to be here to bring you the news you need every single day of the week. All right, let's talk about consumers today. Consumers a little bit pissed off now, about had it with this inflation, about had it with high prices, about had it with our government's mealy-mouthed attempts to make it seem like, hey, guys, don't worry, everything's getting better, but you know what? It's hard to tell a guy, hey, you poke him in the eye with a stick that's on fire, and you want to tell him that it doesn't hurt. I think consumers have just about had it with that. This idea now of rates going backwards, well, that's really, really, really bad, okay? So the universe, we knew we were getting this today. Attila, my man, thank you. We knew we were getting the University of Michigan today. That's a huge one with consumer data. Shows today consumers are just tired, angry of this whole inflation and economy thing. Consumer sentiment falls to 77.9. That's down from 79.5. Now, it's going to fall more than that, guys. I don't really see a reason for consumers to get happy. They're not going to. So this is just the start now of consumers souring on all this. Bad news for Biden here. Kind of puts the happy stories to sleep. The belief in all these rate cuts going to come save everybody. consumers have had it with all of this. And what's interesting here, okay, is that the sentiment was really moved by how you feel politically, right? So the biggest drop in consumer confidence was Republicans. Not surprising. Their natural hate toward the Democrats and Biden. The middle drop was independents, who only dropped small. And then the Democrats actually had a slight increase in their consumer confidence. So it's fascinating to me, the political influence now on this economy. I guess it kind of goes to the media too, obviously. What you're hearing every day is going to kind of direct the way you're feeling about it. If you're listening to right-wing media, you're getting a big dose of everything sucks. If you're listening to left-wing media, you're getting a big dose of everything's wonderful. So I guess that kind of could move the sentiment a little bit. But I'm telling you guys, everybody's had it. And this inflation fight is not over. It's not like we're going to go, the Fed's going to wave a magic wand and this fight's going to be over. We got the rest of this year to go. We're unlikely to get any rate cuts this year. We'll see where inflation stands then to make any kind of real predictions for next year. But, you know, as I've been telling you guys, I was around for the last big one in the 70s and 80s. Now, granted, I was not a real consumer yet at that point. I was a young guy. And it takes a long time to get rid of inflation. Now, I got to give props to the Fed. They seem to be really following the playbook. They learned some lessons from that. And the biggest lesson they learned was you can't cut rates before the fight is over. Now, as tempting as it might be to cut rates, they've learned what happened in the 70s and 80s. Even Volcker fell victim to it. He cut rates. He had them, raised them up. It looked like inflation. He had raised them up almost at 20%. It looked like inflation fight was going to be won, kind of like it was looking for us for a while. He cut rates back down, and guess what? Woof, here came another big surge of inflation, another big surge of unemployment, raised rates up 20% overnight. That was the era of the 15% mortgage. Luckily, back in those days, credit cards were not as prevalent. You know, not everybody carried 12 credit cards back in 1980. So would have been interesting to see, though, what the interest rates on those credit cards would have been. Because if the Federal Reserve had to raise their overnight rate even to 10%, you could see 40% interest rates on credit cards, man. Because even the 30%, truthfully, should be like illegal. It's usurious. And that used to be legal in this country, illegal. Now it's like anything goes. So anyway, the politics of it, fascinating to see how it affected this. Now, here's the bad news. Consumers believe that inflation is going to stay elevated. They now see inflation this time next year, 3.1%. Now, it's 3.5 right now, so they're thinking it might come down a little bit to 3.1. Here's the thing, though. If this time next year inflation is 3.1, how many rate cuts you think we'll have seen between now and then? Think we'll see any? They can't get inflation under 3%. You think they're going to cut rates? Crazy times, guys. So anyway, this University of Michigan thing today was not great news for us. Consumers, like I said, have had it, and I get it. I have too, man. I went to the grocery store with my wife yesterday, and I just said, holy crap, 100 times when I would look at the price of stuff and just go, holy crap. I mean, just everything is higher now. It's crazy. All right, anyway, let's wrap this up with a couple of some stuff you guys need to know before the weekend here. Credit card delinquency is spiking, now at believe it or not, an all-time high. 4% of all credit cards are now more than 30 to 60 days late. 90-day lates are also spiking. Now, the data only goes back to 2012. I guess that's when they really started to, check delinquencies on credit cards like that. So let's just say in the past 10 years, delinquencies are higher than they ever have been, or 12 years. And I got a feeling, guys, this is only the beginning of it, as people are using credit cards desperation credit card use where they need to use a credit card because they can't fill their tank without it. They can't get the groceries they need without it. They can't pay the utilities without it. It's not going to end well. Analysts say office building values still have 25% more to drop before the bottom ends. Now, this is especially prevalent in the bigger areas, San Francisco, New York, Chicago, some places in Texas, Seattle. Guys, this is so bad. They've managed to cover and mask this so far. The regionals getting killed with this stuff, right? In addition to their reserves being underwater like they are. It's just crazy times for regionals. And one of these, we haven't seen the straw that broke the camel's back yet, but it's coming. Jamie Dimon out in the news today again, talking about stagflation. I mean, this guy's doing nothing but issuing warning after warning after warning after warning. Okay. Now, whether you love him or hate him, he's a pretty bright guy. You don't get, most dummies don't get to run the biggest bank in the country. So this might be something you might want to take a little bit of heed to and really make some moves to be conservative and protect yourself. At the same time, Blackstone, our friends, BlackRock. Blackstone's already there, I think, but BlackRock now has, are you ready for this? $10.5 trillion under management. $10.5 trillion under management with one company. Nothing like a big concentration, right? And here's the sad news for the day, guys. U.S. Steel. One of the, we all know the history of U.S. Steel. J.P. Morgan, Andrew Carnegie, biggest steel, made the U.S. what it is. Okay, a manufacturing powerhouse. Their shareholders just approved the sale of U.S. Steel to Nippon Steel, the Japanese steel company. End of an era, guys. A long, long, long era. Bye-bye, U.S. Steel. Anyway, guys, that's it for the week. We appreciate you guys being here. I appreciate that, Tilla. Really, I do, buddy. We'll be back next week to bring you guys the news you need. I want to thank you guys, man. We had a really good week this week with the amount of views we had. We had, everything was up on our analytics this week. That's all because of you guys. I just want to thank you guys wholeheartedly. I can't tell you how much I appreciate it. We're going to work hard to make the show a success. Can't do it without you guys. Have a great weekend. I wish I could say the Bills were playing this weekend, but no. Have a great weekend. Get away from the crazy. There'll be plenty more next week. We'll be here to bring you guys the news you need. Till then, everybody, have a great weekend.